I went over there. I was like, hey, I'll put in the money. I'll fix it up. We'll see if we can rent this place out. He was like, well, I'm not sure if anybody's going to rent it, but, sure, give it a try. So, I went over there some weeknights, weekends, fixed it up, filed cabinets, put some paint on.
There is a new American dream. One that doesn't involve working till you're 65 before you start enjoying life. If you're someone looking for ways to regain control over your time and check off that bucket list now, you're in the right place. We share tips from experts on investing, personal finance, and mindset so that you can finally have the freedom to work less and live more. This is the Freedom Investing Podcast with your host, Chris Toribio.
What's going on, everyone? This is Chris Toribio with the Freedom Investing Podcast, and I'm so happy you're here to join us for another amazing episode. If this is your first time tuning in, welcome to the show. Please make sure to hit the subscribe button so you can stay up to date with our latest episodes. Moving on to today's guest, we have David Lyons. David is a former finance professional and short-term rental host turned full-time commercial real estate investor in Atlanta, Georgia. As a founder of Red Fox Investment Group, he focuses on buying retail, medical office, and industrial properties. He is passionate about living life on his terms and helping others do the same. David, welcome to the show, brother. Before we dive into it, give us a quick 2-minute rundown of who you are, your background, and where you are in your journey to achieving time freedom.
Hey, Chris. Thanks for having me. It's great to be here. Sure. So, as you said, I'm in Atlanta, Georgia. I previously worked in corporate finance, financial planning and analysis, analyzing investments, income statements, forecasting, that sort of thing. I spent 7 years doing that, mostly in the Atlanta area. And then I actually just quit my W-2 job over the past summer, so in June of 2022. And now I am full-time into real estate. So as far as where I am in my financial freedom journey, I'd put myself at level 1, where my passive income covers my living expenses, and that has given me the freedom to go pursue what I'm really interested in commercial real estate, and really just go all in on that and see where it takes me.
That is awesome. First and foremost, congratulations on reaching level 1 FI. That is a huge step in your journey towards achieving full freedom. Hats off to you, man. That's awesome. And so talk to us a little bit about that, right? So you were working in the financial world, and then you transitioned first into short-term rentals, and then now into full-time commercial real estate. Why did you choose real estate as your asset class of choice when it came to trying to achieve this level of financial freedom?
Sure. I was always interested in real estate. Like, I think a lot of people kind of mention, you see a lot of wealthy people and they own real estate. The idea of just somebody sending you a check every month and, paying down your mortgage is pretty appealing. And then the idea that the property can appreciate, it's just very intuitively a sound investment. And so I was always drawn to it. And then I remember one time I was in Barnes and Noble, just kind of messing around. I was at the Starbucks next door and I found Rich Dad, Poor Dad. And I started picking it up and I was reading and I was like, this makes a lot of sense. This idea of like cash flow and assets versus liabilities and, buying things that pay you as opposed to things that you have to pay. And I was like, well, real estate is the most easy way to do that, the most straightforward way of doing that. And, then you get into the tax benefits and all those sorts of things. And I would say the Rich Dad, Poor Dad was really something that drilled that into me. And it's a relatable thing. It's something you can see and understand, especially on the residential side of things. People need a place to live, and short-term rentals is really just a kind of tangent off of that. You're, still in the residential space. It's something that for me was easy to see and understand. And so it was a good entry for me into the real estate space.
That's awesome, David. And we are right around 20 episodes, and I don't think there's a single episode where someone has not mentioned Rich Dad, Poor Dad changing their life. So hats off to you, David, Robert Kiyosaki. So when it comes to transitioning into the real estate space, did you have any sort of experience with your previous clients? I know that you had mentioned you were a little bit of in the financial planning industry. Did you kind of see that from some of your successful clients as well? I'm just curious.
Not specifically. I maybe had a couple like distant relatives who maybe owned some real estate, and I kind of saw that worked out for them, but no direct mentors or too direct close experience with anybody that that really opened up my eyes to that. It was more so the books and some of the education that I started listening to, Bigger Pockets and that sort of thing.
Gotcha. And so the first step you did into real estate was the short-term rentals. So can you kind of talk to us a little bit about why you chose short-term rentals when you first got started and what you did to best position yourself to purchase your first property?
Sure. So I got into short-term rentals initially just because it was kind of the easiest way for me to get started. So my girlfriend and I at the time, and now wife, we had gone to Costa Rica and stayed at an Airbnb, and I had stayed at a couple of Airbnbs in Europe. This is like 2015, 2017. And, I realized that was a thing, a popular thing. It made sense to me. It seemed like a space that was going to grow. At that point in time, I didn't have money to buy a property, and I wasn't really educated or confident enough to buy a property. But my girlfriend was like, hey, well, my dad has this basement apartment unit, and, he's not using it. So, why don't you just go over there and fix it up and see if you can Airbnb it? And at first I was like, well, why am I going to do that? Like, that's not how you're going to get rich. But then eventually it grew on me. I was like, you know what? This opportunity is in front of me, so I'm going to go after it. I went over there. I was like, hey, I'll put in the money. I'll fix it up. We'll see if we can rent this place out. He was like, well, I'm not sure if anybody's going to rent it, but, sure, give it a try. So, I went over there some weeknights, weekends, fixed it up, filed cabinets, put some paint on, decorated the place up and listed it on Airbnb, and, people started renting it. It gave me some confidence to get started, some great cash flow. I saw that it wasn't as scary as it seemed to me at first, and the cash flow was great. And that really gave me the confidence to go ahead and buy a property with a plan of Airbnb-ing it, which I wouldn't have had I not done that. So then I wanted to buy a property, and my plan was to Airbnb it as opposed to a long-term rental because of the greater cash flow. And at that point in time, I wasn't seeing good cash flow from a long-term rental perspective, but with Airbnb, the cash flow is much greater. And that's why I started pursuing that strategy and the investment side of things.
I love it. Yeah, we always say you have one of three things when you're getting started, right? You have time, you have experience, or you have money. Most people don't have experience. And a lot of times when you're just getting started, you don't have money. So you do have to kind of leverage one of those things, which happen to be time, and put in some sweat equity to kind of make that opportunity for yourself. So that's great. We did kind of the same thing over here with our house hack, and we rehabbed our garden unit apartment in a very similar fashion. And so from that first property, you gave yourself an opportunity to experience what it's like being a landlord, managing the short-term rental property. What was the next step from there? Did you purchase another Airbnb after that?
My next step from there, so shortly after that, I was planning for a wedding and COVID hit and that sort of thing. So and my wife or my girlfriend at the time was in law school. So it made it in scaling up a little difficult, but we set our sights on a personal residence, which we house hacked. We house hacked with Airbnb. So we rented out a couple rooms in the house, and that was an easy next step that still didn't require an enormous amount of capital. And then from there, I went ahead and was able to pull some equity in the two properties I did have and use that to go buy another short-term rental unit in a vacation market in the Smoky Mountains. And that was kind of my next step.
I love it. So slowly but surely over time, as you develop this experience, you develop these systems in place, that's when you're able to finally reap the benefits of all this hard work by pulling out some of that equity and then purchasing another property from there. And so talk to us a little bit about that, because now you have, at this point, is it 3 short-term rental properties that you have?
Is it 3 properties and and five doors?
And 5 doors. And so many people are looking at the short-term rental industry and thinking, well, there's definitely a little bit more of a hands-on component to it as opposed to your traditional long-term rental. What kind of systems have you kind of put in place to kind of help make this maybe as passive as possible, given the fact that you had a full-time job up until this point?
Sure. There's definitely some systems in terms of guest messaging. A lot of that can be automated, welcome messages, check-in instructions. I use a digital welcome guide to share with guests that lays out everything they would need to know about the property. It can be updated easily, so that helps. It's being proactive with guests and kind of answering their questions before they have them. That helps. I have an on-call maintenance man who does either monthly or bi-monthly inspections of the property just to be able to fix up issues as they come up or before guests tell me about them. So that's been helpful. Let's see what else. Pricing. I use smart pricing software that automatically adjusts pricing, and you can influence that, but it helps, adjust pricing for things that, you're not going to be aware of every single weekend when there's an event and that sort of thing. So yeah, the messaging, the pricing, the maintenance, my cleaner's calendar is synced up with my Airbnb calendar. So she automatically knows when guests are checking in and out, and I don't have to be on top of scheduling that. So those are probably the 3 or 4 systems that have helped most in terms of automation.
That's awesome. So kind of just to summarize that, it sounds like you have someone on board as far as your team is concerned. It's maintenance. You have someone on board for cleaning, and then you put a system in place for the actual management, which is pricing and customer communication. Does that sound about right?
Exactly right. Yep.
Gotcha. Okay. And so at this point in time, how many hours per week would you kind of say that takes, being able to try and keep these places full and managing the tenants in the meantime?
I would say 2 to 4 hours, thereabouts.
Wow.
Yeah.
Wow, that's great. And so at this point in time, you have 5 doors, you have 3 short-term rental properties, and now you're able to cover your own personal expenses so that way you can take a step back from your W-2 and then jump into full-time commercial real estate. So how has that transition looked like? And at what point did you realize, like, wow, I can actually make this jump?
Sure. I would say the beginning of this year, I started thinking about that and thinking about, hey, like I want to move into what I'm passionate about. And I've been doing this a while. I built up the confidence, the skill sets of investing, managing real estate, all of those skills. And it was always on my radar. And I wanted to get myself to a point where I had enough financial cushion that it wasn't like I needed to start making more money or have the next deal be a home run in order to be successful. And by the summer, so the middle of this year, I kind of got to that point and said, hey, this is a good time for me to take the leap. Just personally, financially, based on my experience in real estate, and went for it. It wasn't something that I, made a decision on a whim on, but based on my planning and considerations for the future, it was the right time to do it.
I love it. And so now your focus is on retail, medical office, and industrial properties. So how did you go about transitioning into analyzing these type of deals? And why did you choose these as your asset class of choice within the real estate space?
Sure. So in terms of analyzing these types of deals, it started with a lot of education. So finding as many books as I could and listening to as many different podcasts as I could. And there's not actually a lot of education in this space. You see a lot of education about multifamily, even podcasts or masterminds for mobile home parks, self-storage are very hot asset classes and industries, but there's not a lot in terms of non-residential commercial. But there's a handful of podcasts. There's a couple of good books that I got my hands on that really let me get a good grip on how these assets work and how you make money investing in them. So that's where I started. And I've also joined a mastermind. I'm looking at other different groups just to continue to surround myself with people in this space, as well as mentors, potential partners that I can continue kind of expanding upon my knowledge and different people that I could potentially work with in that space.
I love that. And that's the beauty of jumping into the commercial real estate space, especially coming from residential properties, is that it really is a team sport. And you had mentioned surrounding yourself with people who have other experiences than you do, being able to join masterminds so that way you can use that as a sounding board between your different ideas is a huge component to the growth when it comes to your success as a real estate investor. Us ourselves have done the same. We have a focus not only on multifamily, but also on senior housing. Kind of leveraging our background with healthcare and real estate investing as well to kind of tap into that space. But ultimately, it's the same thing. One, there's not very many forms of education that's out there. 2, you do have to find yourself a group of people where one, they're able to help keep you accountable from a mindset standpoint, because that's a huge component to it. And two, just being able to leverage the experience of other people so that way you don't make the same mistakes, potentially costly mistakes that other people have made.
Exactly right.
Yeah. And so when it comes to jumping into this space, what does that look like for you? I guess, how are you starting to identify these type of opportunities, especially in today's economy?
Sure. So it really comes down to narrowing down on an asset class or two. So I've kind of identified, retail, medical office, and industrial, but specifically starting out right now, I'm looking specifically at industrial properties, small industrial properties, sub 2 million, and really in the greater Atlanta area, a couple small cities maybe surrounding Atlanta, so that I can really get familiar with those asset classes. So there's a couple things you need to know when you're looking at a property. You need to know the price per square foot, and if it's below replacement cost specifically. You need to know the lease rates for that asset class, and if it's vacant or if there are some vacant spaces in that property, what you think you'll be able to rent it for, right? And if there's leases that come for renewal, if you'll be able to increase the rents or how easily you'll be able to renew based on where those rents are at. And then also understanding kind of the lending criteria that banks are looking for in these properties. And there's a few different factors, but lease term's a big one. How many years are remaining on a lease for any tenant that's in there, as well as, standard things like debt service coverage ratio, loan to value, and just understanding what a bank's going to be looking for, because they're going to be your biggest partner in the deal. They're going to be providing most of the financing and the funds to acquire it. So just understanding some of the few key metrics and, banks criteria, and then also understanding your investment plan. Like, are you going to sell this property? Are you going to add value and refinance it or hold it for the long term? And that gets into understanding just like the market itself, cap rates, the way these properties are priced, what it will be worth once you improve the property. So those are the few things that I've really dug into and kind of made sure I understood in terms of analyzing deals.
That's awesome. And for the sake of our listeners, when it comes to this asset classes, right, retail, medical office, and industrial, can you kind of describe a little bit high level of how the value add component looks like when it comes to these properties, and what is usually the play in terms of being profitable when it comes to these type of properties?
Sure. So in terms of adding value to these properties, the main way would be finding a property that's under market occupancy. So if you have a retail center that's only 70% occupied and the market occupancy is 90%, or you have reason to believe it could be 100%, that would be the easiest and most straightforward way to add value. And as you lease up the space, you're going to increase the income and make it worth more. The other ways you can add value are fixing up the property itself, can increase the rents, right? And generally I'm looking for just cosmetic updates, light paint, fixtures, the interior, making it more appealing to tenants and anybody who could be interested in the property to rent or sell. The other thing would be the management of the property just in general. You could have under market rents because the owner or the leasing agent really isn't doing a good job marketing it. They're not keeping up with the market rents. And so when those leases come up to renew, bringing those rents back up to market, just improving the way that you're marketing the property to get better rents in the first place. Those are a couple of the main ways to add value to these properties.
That's great. So that's the difference, right? Because, we have a lot of people here that still may be investing in residential properties, and a lot of it is really based off of the market comparables within a certain radius of your subject property. Mm-hmm. And so if you want to add value, you essentially have to take inventory of what the other properties within your area are doing and essentially matching it to achieve very similar values to those. When it comes to commercial real estate, it's a very different type of approach, right? The different strategies you were describing, the bottom line here is increasing the level of income that those properties are generating. And then in the eyes of the bank, if you're able to increase the amount of income or decrease expenses, ultimately increasing your net operating income, that's really what's going to drive the value of that property up. The other thing you mentioned that was really interesting was making sure that you just increase the level of occupancy or renewing a lease, so that way it's extended for a much longer period of time. Can you kind of highlight why that may be making a property a little bit more value than one where a lease is right about to expire?
Sure. So the main reason is because if you're selling to an investor, which mainly if you're selling a building that's occupied and leased up, it's going to be an investment buyer, is what they're looking for is their returns. And if they can only project their returns out 2 years because that's how long the lease is, and they don't know if that tenant's going to renew, then that's going to be more risky for them. And probably more importantly, it's going to be more risky for a bank. So if you have a lot of leases that are expiring within 1, 2, or 3 years, a bank's going to be hesitant to lend on that, or they're going to have much stricter lending requirements because they're not sure that if that tenant doesn't renew, if you're going to be able to pay the mortgage for the property. So in terms of lendability and just security of that income for the investment buyer, that's the main reason.
That's a great explanation. We actually had lunch with one of our mentors yesterday. His name's David Monroe. He's a CCIM and a CCIM instructor. And one of the things that he's been mentioning lately is the banks, right? Like that is really where there's a lot of resistance to being able to close deals recently because of the way the market has been shifting. And so where they were traditionally lending 65, 70% loan to value on a commercial property, now they've required more equity, or in other words, higher down payment for a lot of these properties to close, and they're only lending at like 45 to 55%. Is that kind of what you've been experiencing as well?
It definitely depends on the property and on the strength of the leases, but yeah, there's going to be a range of things, and certainly banks are becoming a little more stringent and a little more critical in terms of the properties that they're lending on, for sure.
Absolutely. All right, David. So we are coming towards the end of today's show, but before we finish, it is time for the Freedom 5. These are 5 questions that we ask every guest on our show, starting with the most important question. What is your why? What is the underlying motivation behind everything it is that you do?
Sure. My why is to be a living example for others of living life on your terms and what's possible when you believe you can do that.
I love that. Yep. Living life on your own terms, lifestyle flexibility, time freedom. We are all about that here at the Freedom Investing Podcast.
There we go.
All right. The second question we have is, what book, apart from Rich Dad, Poor Dad, has had the largest influence on your life?
I shouldn't have given up Rich Dad, Poor Dad too early in the show, I guess. So outside of Rich Dad, Poor Dad, I would say Principles by Ray Dalio. It's a great book in terms of, he talks a lot about failing forward and just embracing the path of learning and continually leveling up and just leveling yourself up and embracing failures to improve what you're capable of doing.
I love that. Yep. It's definitely a mindset shift in being able to just make the jump, right? So I come from a science background, healthcare. One of the things that we have to do in order to move forward is understanding every single possible thing that can go wrong before you take action. And as we both know, when it comes to entrepreneurship and real estate, that's just not going to be the case. I mean, there's always going to be some component of risk and some component of not knowing. And at some point or another, you just have to equip yourself with as much education as possible and then just finally just make the jump. And so if you kind of reframe it and think, well, I'm either going to succeed or I'm either going to learn instead of fail, then there's no way you can fail because it's just going to be another learning experience.
Exactly. I like the way you said that.
Third question we have here. What is the most impactful thing, whether it's a piece of technology, a habit, or a person, that has helped in freeing up your time?
Sure. So for me, it's a habit, and that habit is deep work. Specifically, I do 2 to 3 90-minute sessions of focused, undistracted deep work a day. At least that's my goal. Most days, unless something comes up, that I really need to attend to, but 2 to 3 hours, 2 to 3 sessions of 90 minutes, undistracted, no phones, no social media. I'm generally unavailable to do the most important items that I need to do for that day.
Ooh, I love that. So can you talk to us a little bit about what deep work is and how do you get yourself in a position where you are capable of doing this level of undistracted work for 90 minutes?
Yeah. Deep work is intense work that requires your utmost focus and attention. And often it's learning a new subject. It's really getting into, an analysis on a property. It's just heavy work that requires your undivided focused attention. It's not shallow work like, things like responding to email or just kind of mindless tasks. It's things that require a lot of your focus and attention. Often it's learning something new or doing in-depth, analysis or something of that sort. A couple of things I do to support those sessions. There's an app that I use called Freedom. It blocks off social media as well as distracting websites. And I turn that on for 90 minutes or up to 3 hours for 2 sessions. And it eliminates the need for me to prevent myself from going on social media, because if I try to go on there, it's blocked and I don't have access to it. I also put my phone usually in another room or in a desk drawer where it's not easily accessible, so I'm not checking it and getting notifications from my phone.
I love that. So you had mentioned the Freedom app. That's exactly the app that we use as well. And it's very powerful. I mean, it can be too powerful sometimes where there's maybe a certain website that you didn't realize didn't fell under the filters. And now for 90 minutes, you can't even access it. And it's like, oh, great. What am I going to do now? Yeah, exactly. But that's a very, very powerful app. And you can use it on your phone. You can use it on the computer, sync it in that way. That's great. Especially in this day and age where there's just so many distractions. It's very tough to get into that level of deep work. Exactly.
It's great to have an app that can help you fight back against the technology.
Right. All right. Number 4 question. What is the number one piece of advice you would give to anyone looking to achieve more control over their time?
Sure. What I would say is be so good they can't ignore you. That's a book. I believe it's the name of the book, actually. I forget the author. But when you're so good at something that they can't ignore you, and principally for most people starting at a W-2, that's going to be your job, right? And so when you get so good at your job that you can negotiate a raise and allow you to save up more, it gives you more leverage in negotiating maybe working from home or having reduced hours or just a little more flexibility at your job. That would be the main thing, because the better you get at something, the more leverage you have, and inherently the more freedom you have to design your own life, because you're so good that people are willing to give that to you in exchange for the quality of your work.
I love that. That's a great piece of advice there. All right, David, 5th and final question we have is, what is the best way for our listeners to get in contact with you?
Sure. The easiest way to contact me would be at my email, which is david@redfoxinvestmentgroup.com. I'm also on social media, Twitter and Instagram at It's David Lyons, ITS David LYONS. I'm not on those social media sites all that often, so email is going to be an easier way, but I'm also on social media. So
that's great. Well, David, lots of really great information today. I really liked how you talked about your transition into the real estate space with no experience, not a lot of money, and just your willingness to put in hard work and be creative with the first deal. I love how you talked about your systems and how you managed to, despite having a very quote unquote active form of real estate, you were able to make it more passive by implementing the proper system so that way you can continue to scale and free up more time to do what's important. I also liked how you talked about the different ways you can kind of be successful in the commercial real estate space, what that looked like, and what mindset shift you had to overcome in order to move forward from there. I just want to thank you again for being a fantastic guest on our show, and I look forward to remaining in touch.
Thank you, Chris. Thanks for having me. It's been great to be on here.
Now, if you like this show and want to learn more about how we can help you free up your time through passive real estate investments, check out www.freedominvesting.com. Make sure to subscribe to our monthly newsletter and schedule an introductory call with our team. We also have a free 7-day course on what passive real estate investing is and how to get started so that you can start your journey towards earning back more time in your life. To all of our amazing listeners here on the Freedom Investing Podcast, my name is Chris Toribio. Till next time.